If this October is anything like last month, we should be in for a great month when it comes to opportunities in the market for us to take advantage of. On this channel, unlike Jeremy, I believe in not buying off of hype and buying based on business fundamentals, free cash flow, dividends, etc. So today, I'm going to be sharing 3 companies that I've rather been buying or looking heavily at for the month of October. These are companies that I believe are amazing opportunities fundamentally as a business and are undervalued when it comes to their relative intrinsic value. I'll be sharing my long-term investment thesis on all these companies, sharing key financials, and so much more. And guys, if you appreciate the content, it would mean so much to me if you could hit that subscribe button for me. Also, if you want to go the extra mile and get access to quarterly reports, which I share how much money I make every quarter, analytics, and so much good stuff behind the scenes, make sure to become a channel member today, link in the description. And with all that out of the way, roll the intro.
Hello, I like money.
The first company should come to no surprise to any of you who have ever watched this channel before, and it's of course probably one of my favorite companies, if not my favorite, of course Visa, stock ticker V. Every time I look at Visa and their business itself, I get more impressed and more bullish by the minute. With that said though, it seems like every investor wants a piece of Visa, and they've been trading at a premium for a while now. With that said, also there could be a current dip coming for Visa. They're currently trading at $231.27 with a P/E ratio of 29.31. 29.31 is a pretty high PE, but of course guys, PE is not the only thing that matters when it comes to valuation, and I'd much rather own a wonderful business at a fair price. Everybody's throwing around the term toll booth business, which essentially means they're the middleman. I think financially speaking, Visa has to be one of my best companies in the portfolio right now. This month earlier, Visa was trading near 250. With that said though, they have gone on a bit of a decline recently. I think Visa is just honestly the case of buying a great business at a fair price. I don't think it's a crazy discount right now, but I do think it's a great time to potentially add to your Visa position and let the compounding continue and begin. And while we overall are going into a bit of a market decline, Visa's held up pretty well. Now something to keep in mind with Visa is that the FTC currently is attacking them and credit card reward points overall, and obviously nobody likes the FTC anymore. They're pretty much a joke, and Lena Khan is the modern day Wicked Witch. I believe this could lead to some solid short-term losses for the company and a potential great long-term opportunity. I like Visa a lot where it's at right now, and if it were to go into the 210s, 220s, I would definitely load up on some. As I mentioned, Visa is probably as financially sound as a company you can get. They currently have a dividend yield of 0.76%, but when it comes to dividend growth, they're nothing to be short on. Before we get to that dividends are obviously the result of free cash flow and free cash flow growth, business performance, operation, fundamentals, etc. Visa has had a very aggressively growing dividend, but that is a result of their free cash flow, which has been a machine. It's ideally what you want to look for when you're looking at any company's free cash flow, just going up right every year. They have a 3-year free cash flow growth rate of 16%, a 5-year growth rate of 18.35%, and a 10-year free cash flow growth rate of 19.6%. Will it continue to be at these high rates? I don't know. Obviously, nothing is guaranteed in the future and anything can possibly happen, but for Visa to go out of business, the world would literally probably have to end. I can pretty much assure you guys that in 20, 30, 40 years, Visa's free cash flow will continue to do this trend, barring something crazy doesn't happen. So let's move on to that dividend and the crazy dividend growth that they've had. And let's keep in mind here, Visa's payout ratio based off of the free cash flow and net income, it is still very low, meaning not only their current dividend payment is sustainable, but future dividend growth is very sustainable as well. They have a 3-year dividend growth rate of 14.47%, a 5-year dividend growth rate of 16.47%, and a 10-year dividend growth rate of 18.49%. For some reason, that looks eerily similar to the free cash flow growth rate, but the party does not stop there, guys. Visa also has an amazing share buyback program, which we'll get into. Share buybacks are another amazing way to really reward shareholders, and over time you own more equity in the company as the company can use buyback shares at fair prices. We can see over time Visa's shares outstanding have gone gradually down with them buying back up to 2.5% shares annually. Now, Visa does trade at a bit of a premium, and whenever you see a company do share buybacks, you want to make sure they're buying back shares at reasonable prices. I would expect as Visa continues to stay at these prices, them to slowly chip away at that shares outstanding count. But if Visa were to go on a crazy dip, I could see them buying back a whole lot of shares. Overall, though, I think Visa is one of my favorite businesses right now in my portfolio. I'm working to have it be 10% of my portfolio, and I'm continuing to chip away at these fair prices. I love Visa so much. You might be wondering how I keep in track with all these stocks, especially during school hours. Well, thankfully, that's due to DividendData.com. Thankfully, DividendData.com is not blocked on my school Chromebook, and I can research my stocks even during school hours. I can research new stocks, track my portfolio, put in valuation calculators during school hours. This is really the best way I can spend my time during school, if I'm being completely honest. It is also a huge time saver compared to other free online resources. What would take you an hour to research a stock could take you 5 minutes on this website. So if you want to try it out, try it for 2 weeks free without charge. Use the link in the description. The next company we have on here is a trash company. And no, not because the business's quality itself. It's literally a trash company. And it's of course Waste Management. Haha, got the jokes out of the way. But in all seriousness though, Waste Management's an amazing business when you look at it. The world is always going to need trash. They've consistently grown their free cash flow, revenue, EPS, and more. They're financially one of the most sustainable companies I can find on the market today. Waste Management was trading in the 170s and 180s for a while, but they've gone on a bit of a dip and are currently trading at $151.21 with a P/E ratio of 27.25. They're currently trading at a dividend yield of 1.85%. I've recently been doing a whole lot more research on Waste Management and really going over their 10K earnings report and so much more, and I'm very happy with the direction their management's really been taking when it comes to the sustainability of their business overall. Like, you're not going to be seeing Visa growth when it comes to their dividend, but you're going to be consistently seeing 8 to 10% dividend growth rate along with free cash flow growth as well. This is a business that's really just been driven on their fundamentals over the last couple of years, and unfortunately it's been trading at a bit of a premium. I have a fair price on them at $160 to $170 right now with their current business fundamentals and future growth rates. My discounted cash flow calculator had them coming out at $162, so I think it's pretty much trading right at fair price, maybe a little under fair price right now, kind of the same with Visa. With that said though, I'll take any opportunity to dip with this company for sure. Waste Management's been one of those companies that I just need to always buy more of, I feel. I want to build it up as a core position in the portfolio. The Bill and Melinda Gates Foundation also does own this as one of their core holdings in their portfolio. No matter what you think of where that money could possibly going, possibly some airplane trips to an island. Now, Waste Management's free cash flow isn't the best free cash flow when you're looking at a company typically. They have a 5-year growth rate of 4.39% and a 10-year growth rate of 10.8%. Big thing to keep in mind here, and this is why you guys always got to do your research, is that they've been making a lot of capital expenditures, investments back into their business, and have been carrying on some debt, allowing that free cash flow to be a little lower than we'd typically like to see. With that said though, they aim to grow their free cash flow 6 to 10% going in the next few years, and I'm pretty sure that's going to realign with the dividend growth that as they had a projection of 8% annual dividend growth rate in their last earnings report. Waste Management, I believe this is sustainable with the investments that they're making now for the long-term health of the company, and I'm fine with the debt that they're taking on right now and not the greatest free cash flow growth that you'd love to see. Before we get into the dividend, I also do think it is notable as well with Waste Management that they do buy back shares as well over time. They pretty much average 1 to 2% buybacks year over year, so just another positive thing to see that they're reinvesting money back into the shareholders more way than one. Looking at Waste Management's dividend, their dividend growth rate, as I mentioned, it's not as great as a company like Visa with that 12-15% CAGR, but it's just sustainable dividend growth, which is I'd love to see. They have a 3-year dividend growth rate of 8.7%, a 5-year dividend growth rate of 8.52%, and a 10-year CAGR of 6.73%. I would expect 8 to 10% growth rates going into the future. Another big thing to keep in mind is that Waste Management has been making a whole lot of long-term investments that will continue to pay dividends down the road. So with Waste Management, I just think it's a very strong business overall, and I'm going to continue to dollar cost average and buy on dips with these prices. Alright, and lastly, we have the most iconic fast food franchise in the world, which is of course Mickey D's, McDonald's, stock ticker MCD. Now, McDonald's typically trades at a premium and typically also doesn't go on dips many times. With that said, the last notable dip I would say would be in 2020 when it got down to $100 a share nearly. McDonald's is a staple of a company that will not be going anywhere for the next 100 years for sure. McDonald's currently is trading at a P/E ratio of 23.76 and a dividend yield of 2.36%. McDonald's is also set to hike their dividend in the next couple days. McDonald's secretly operates as a real estate company with their franchisees, which they charge a fee every month for basically operating McDonald's at the property itself. This is an amazing way for McDonald's to become one of the most profitable companies in the world and not be so reliant on razor-thin margins when it comes to their food itself. As I mentioned though, McDonald's is down 2.16% today, and over the last month has been trading down a little bit too, coming down from its highs at $280. McDonald's is a company that I'd love to add more to my portfolio, but at the right price. They're not going to be seeing crazy growth like Visa or Apple, but it's a great long-term company nonetheless, and I think I can get a market-beating return at the right price. McDonald's free cash flow is a really nice trend right now with a 5-year CAGR of 10.22% and a 10-year CAGR of 6.75%. In the last few years, they have been a little down, mainly because of the huge spike that they had in 2021, like every other company in the stock market. But in all seriousness, they've had some really impressive growth over the last 10 years when it comes to their free cash flow, and it continues to trend upward. Speaking of McDonald's dividend payments, they've also been pretty strong as well, while consistently maintaining a solid dividend yield and sustainable payout ratio. They have a 3-year dividend growth rate of 6.74%, a 5-year dividend growth rate of 8.52%, and a 10-year dividend growth rate of 7.04%. It's all sustainable dividend growth, which is what I love. McDonald's also has bought back shares over time, which is another amazing thing I love to see. With a company like McDonald's, it does trade at a bit of a premium, but there's a reason for that. Their iconic brand, consistency of financials, and so much more make them an amazing company to own for the long term at the right price. With that said though, if I were to add to McDonald's, it would probably have to hit $240 for me to consistently add. If you made it to this part of the video, I greatly appreciate it. I'd love to hear your thoughts on the 3 stocks and companies that I shared today. Which of them do you own? Which of them are you avoiding? I would love to hear in the comment section. Also, check out the Cash Flow Kings channel. That will be linked in the description. Bunch of content from me and Fiscal Philosophy over there. We're streaming every Saturday. Come in the live chat. Have a blast. Thank you all for watching. And of course, subscribe and do Dividend Stocks I. Have a good one.